Today, federal prosecutors reveal new charges against Do Kwon in hopes of extraditing him to the U.S. Messages reviewed by CNBC show how Binance employees helped Chinese customers avoid the government's crypto ban. And with trading volume plummeting, major companies collapsing, and swift regulatory crackdowns all in the past year, we explore just how surviving crypto exchanges stay afloat. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Digital assets turning lower today in reaction to fresh fears over the banking system, with Deutsche Bank's debt now in the spotlight. As of noon Eastern, Bitcoin fell about 2%, but still traded above $28,000. Ether dropped 3.9%, and Solana fell 5.5%. Looking out over the past week, though, Bitcoin and Ether have both posted solid gains, about 6% and 3% respectively. One of the biggest drivers of those gains came from the Fed, which raised rates on Wednesday, but also hinted they could slow down in the near future. Okay, let's talk about the top stories. First, just hours after Montenegrin officials announced the arrest of Terraform Labs co-founder Do Kwon, U.S. officials have jumped in with fresh criminal charges. New York federal prosecutors charged Kwon with commodities fraud, securities fraud, and wire fraud, among others. The new complaint is on top of charges filed earlier this year by the SEC. This is all part of an effort to force Kwon's extradition to the U.S., but officials in South Korea are looking to do the same as part of the collapse of Terraform Labs, which wiped out $40 billion in investments and set into motion the collapse of Three Arrows Capital and a host of other crypto firms. Next, as people flock from USDC, Tether and its USDT stablecoin are reaping the benefits. The stablecoin issuer expects to make $700 million in profit this quarter, which it says will bring its excess reserves to back the Tether stablecoin to more than $1.5 billion. When Silicon Valley Bank went under, investors feared for the resilience of USDC, which held billions in reserves at the bank. Despite getting that money back, USDC customers still poured into Tether, growing the number of Tether stablecoins in circulation from a little less than $71 billion on March 1st to more than $78 billion as of Thursday. And finally, China might have banned crypto nationwide, but Binance employees and customers are revealing how they skirt the government's ban. CNBC obtained and translated hundreds of messages from a Discord server run by Binance. In the group, users identified as Binance employees and volunteers shared ways to evade Binance's KYC, residency, and verification protocols. Some tips even included ways to forge bank documents or give fake addresses. When asked about these evasion techniques, a Binance spokesperson told CNBC, "We have taken action against employees who may have violated our internal policies, including wrongly soliciting or making recommendations that are not allowed or in line with our standards. We have strict policies requiring all users to pass KYC by providing us with their country of residence and other personal identification information." You can read that full story over at CNBC.com. All right, on to our main story. Digital assets have grown in popularity in recent years, with many who want to invest in the space turning to crypto exchanges. But now, some investors have refrained from buying amid the downturn and the lack of trust sparked by the collapse of FTX. So Crypto World's Talia Kaplan explores how these crypto companies make money, especially in the current environment, and what those firms are doing to stay afloat until the situation improves.
Crypto companies have had a rough year. Coming off the collapse of FTX and now digital asset-focused banks Silvergate and Signature, the once red-hot industry remains in a crypto winter. There are survivors, though, including Binance, Kraken, and Coinbase, and they all need to stay afloat in 2023.
The way in which crypto companies tend to make money is through fees, right? And those fees get higher the more volume you can generate. So the typical model in an exchange is to get as many customers as you can through the door. Now, for that model to succeed, it depends on volume. What's happened in the crypto universe is that volumes have fallen.
What would you say are the main problems associated with these revenue models?
Well, they're just entirely reliant on crypto markets and crypto trading. And these crypto exchanges, they're principally serving retail customers. Even like, Coinbase, which does have an institutional business, most of their revenue is coming from retail traders. And retail trading is fickle, right? It's driven by sentiment. It's driven by price action. So until prices come back up, these exchanges are going to have a hard time making money.
Let's use Coinbase as an example. It's a publicly traded company and makes regular disclosures about its earnings and losses. The crypto exchange's latest earnings report revealed usage continued to decline in the fourth quarter, which included the bankruptcy of FTX in November.
What's clear in the Coinbase disclosures from February 21st is that trading volumes have fallen over the last quarter, understandably. Revenues have dropped significantly, 75% from last year. But what is clear too from the Coinbase example is that there's an attempt to diversify away from just relying on fees and volume to do business.
A Coinbase spokesperson told CNBC that the company spent significant time diversifying revenue streams. The spokesperson noted that subscription and services revenue at the company grew more than 17 times to nearly $800 million in 2022 from less than $50 million 2 years before.
Having a services-based model and subscriptions means that you are finding ways to tether customers more closely to the exchange.
Coinbase's fourth quarter earnings showed that Q4 total transaction revenue declined 12% compared to the quarter before, with Coinbase attributing the drop to lower trading volume. Consumer trading volume declined 23% quarter over quarter, and institutional trading volume fell 6%. When asked what the firm is doing to account for that loss in revenue, a Coinbase spokesperson told CNBC the company has taken significant steps in reducing operating costs to weather the crypto winter. In January, Coinbase announced it was slashing 20% of its workforce in its second major round of cuts. Many other crypto exchanges, including Kraken, also reduced jobs recently to cut costs amid the current downturn.
We've gone through these bear markets at least 3 or 4 times in the last decade plus that Kraken's been around, so we're very familiar to this kind of environment. Every single time we hunker down, we focus on our long-term vision, accelerating adoption of cryptocurrency, and we're really focused on bridging the world to the most exciting areas of crypto. So, for example, in the last several months, we've been working on an NFT platform that we just launched the beta for publicly. We've also completely revamped our Pro interface recently.
An exchange is positioned very well to offer a suite of products to customers. The question really is about how to be compliant in whichever jurisdiction they're operating.
Now, Kraken lost a source of revenue in the U.S. last month when the crypto exchange settled with the SEC for $30 million and said it will shutter its staking operation in America. Kraken's on-chain staking program allowed U.S. customers to earn rewards on their crypto holdings. Do you think the recent staking as a service restrictions imposed by the SEC could make the situation even harder for crypto companies in terms of revenue?
100% it's going to make it more difficult for crypto companies to get involved in staking. It's a frustrating time in the industry where you have people who are here. They're not operating in foreign jurisdictions. They're here. They're employing thousands of people. They want to figure out how to offer those products and services, and their hands are tied.
They are trying to diversify their revenue streams. They face headwinds there. Just look at the Kraken settlement around staking as a service, right? Which is something that Coinbase also offers. So that's an element of their bottom line that's now under threat.
Kraken is a private company, meaning it doesn't have to disclose its financials at all. When asked what the company is doing to compensate for the loss of revenue from the closure of its U.S. staking operation, a spokesperson said that the settlement with the SEC impacted low single digits in the firm's net revenue and that non-U.S. clients can continue to access the exchange's on-chain staking services.
All of the staking services that are running across Asia and other parts of the world will continue to run. And we know firsthand that many U.S. customers, U.S. users, go to these services offshore.
The Kraken spokesperson also stressed that the exchange's key revenue drivers come from the firm's, quote, diverse range of products and services, which includes its spot exchange and NFT marketplace. Binance, which is also a private company, has an NFT platform and a VC fund, but the chief strategy officer for the world's largest crypto exchange by volume says the firm's main source of revenue is from transaction fees, accounting for more than 60%.
A Forbes article came out in January claiming that Binance is struggling to hold on to assets following the bankruptcy of rival FTX, and that the outflow of cash is worse than your CEO indicated the month before. Citing numbers from a crypto data firm, Forbes reported that customers withdrew $360 million on one day alone in January, and that their investigation found that nearly a quarter of Binance assets left the exchange in less than 2 months. If that is in fact the case, how are you able to stay afloat?
No, that's not the case. Between December 12th and 14th, we saw approximately $6 billion in net withdrawals kind of leave our platform. Now, mind you, we're an exchange. We make money off transaction fees. And so even when people are removing their money off our platform, they're closing out positions, et cetera, we're actually still making money off transaction fees. But within a couple of days, we started to see those net deposits come right back onto the platform. And so, we continue to see really steady revenue generation and really steady income. And we expect that's going to continue at least in the foreseeable future.
Is Binance able to withstand the current downturn with your revenue model as it stands?
Our revenue model and the way that we save for rainy days and the way that we diversify those savings out of crypto, including into traditional fiat, into stablecoins, ensures that even if the market went to zero for a prolonged period of time, Binance will be able to weather that storm.
Okay, that's all for Crypto World this week, but we'll be back again Monday, so we'll see you then.